Okay, so we're here to talk about the four-year cycle, and I have a book coming out called Bitcoin Super Cycle. It's distributed by Simon & Schuster and Peak Point Press. If you just Google Bitcoin Super Cycle, Amazon, it's got the pre-sale link up there, and I will be giving out free ordinals with the book cover for the first 1,000. That's the last I'll say about the book. So we've got different points. We obviously had a sort of a pre-discussion about this. The four-year cycle, I think, is certainly something you can't deny thus far in terms of how it has been playing out. But will it continue? Every single time that the four-year cycle has happened, you have a halving, you then have a new all-time high, beating the prior one 4 to 7 months or so. This was the first time that it was before the next halving. What does that mean? And then you end up having, about a year until it pops, does a crazy parabolic run-up. It was 100x in 2013, 30x in 17. It was only a little under 8x this time. I think it'll be 3x the next time. And so, Dylan, you want to start with your thoughts, and then we'll pass it around?
Sure. I think in the past we've had these kind of very symmetrical boom and busts, but and people attribute that to the halving. I think the halving is a psychological effect. I mean, it's obviously programmatic. It's built right into the code. But at this point, the supply and demand, one of the best guys in the business here, James Check, parses through all of the on-chain data. The beauty of Bitcoin is you can see every single coin in the supply. You can see when it last moved. You can do a lot of really cool things. It's almost like this new field of economics. And if you break it down, the halving, the change in supply of new supply issuance from 900 to 450 that happened this spring, it's really not all that significant, I think, in terms of the supply and demand, right? Just one daily inflow of the ETFs, far outstrips the would-be change in supply, right? So I think at this point, the bigger driving force isn't this kind of a mimetic supply and demand boom bust cycle, but supply and demand obviously sets the price, but it's not just this halving or this 4-year rhythm. There's a lot bigger forces at play, especially at a $1 trillion market cap, right? This is very much a macro asset these days. If potentially, Donald Trump is speaking tomorrow, it's entering a geopolitical realm, if you will. So, I wouldn't doubt that we have a parabolic run-up and, a boom and a bust, right? At the point where everybody's saying this is hyper-Bitcoinization, it probably falls 60, 70% again. But I don't know if this symmetrical sort of 4-year cycle happens in perpetuity, right? We kind of continue to slay these previous preconceived notions about Bitcoin.
Yeah, so I think just to add to that, what drives the actual 4-year cycle? Obviously the halving is something that people will immediately go to, and that's obviously a supply shock, and that probably had more of an effect in the early days. The political cycle is 4 years, right? And that's got to do with money printing and all these different elements of what is the deficit spending looking like at any particular point in time. But there's also a psychological component, because markets they adhere to the laws of physics. They cannot just go up in a straight line forever. And what happens is the higher the price goes, the more hodlers start to actually spend and oversaturate that demand. And what typically happens is when markets break to a new all-time high, we go to price discovery. Generally speaking, and this is definitely true for Bitcoin, the clock starts ticking. So the market keeps going high, people get more excited, they start to take more profits, more people start to hear about it, more smart money take profits, and eventually there's only so many people who are going to hear about Bitcoin from their Uber driver, and eventually you just run out of these people. So bull markets, and particularly the euphoric phase of a bull, has a lifespan, right? Before you get to all-time highs, so where we are at the moment, still very stable, and we could, in theory, keep climbing in this stair-stepping pattern for a long time, but once it really starts to move, things start to wind down. So there's that timing element as well. What's time to get to all-time high? And once you go beyond that, there's only so long can keep going.
I was going to say, while those all-time highs, tempt whales to start spending some of their 100x or 300x Bitcoin, it also brings in retail, and that provides some liquidity. Alex?
Yeah, we want to see people get involved again in Bitcoin at scale. I'm the belief, and I think a lot of the data shows this on chain, that we don't have a massive retail excitement about Bitcoin yet. And I do think that is healthy. I think you're right, James, that the excitement around an asset, right? It's not just some company with a good new product, right? Bitcoin is a global movement. It's an extremely decentralized and exciting asset and asset class. And so it is prone to these waves of hype, right? That feed on each other in these flywheels that can expire. So I always prefer a healthier, more methodical interest. And that's why it's great, by the way, to be in Bitcoin at times like over the last few years when the tourists either were forced out or exited, and us here that are committed to this movement were around to stack. You do think it has to evolve further, though. I mean, I'm looking at these ETFs now as possibly something that would break the chains of the prior cycles. I know we're going to talk about this, but the maturation of Bitcoin as an asset, with now a presidential candidate, former president talking about it, another candidate here today, it's not niche. So that's another factor that should blunt the hyperbolic, wild, speculative blow-off tops, I would think, going forward.
So I agree with you, by the way. I think that Satoshi intended the 4-year cycle to be concurrent to the U.S. presidential because, again, it does kind of reset expectations for another 4 years, just as you're resetting expectations for Bitcoin. You had mentioned, Alex, that we don't have the same type of excitement yet. Well, that's because we haven't really broken the all-time high by that much, and we just had the halving. What does everyone think is going to happen to retail in interest when we hit 100,000?
I mean, I'll come right out and say it will be a very big moment. I mean, you already see incredible coverage of Bitcoin regularly on financial media, right? It's all over CNBC. Jamie Dimon complains about this anytime he goes on it. Why is CNBC covering Bitcoin so much? Nobody cares. Well, obviously, they know what their listeners and viewers want to learn about.
And he's changed his tune recently on that, too.
I mean, you're going to see Bitcoin crosses 100K as a flashing red banner on every single Bitcoin Bloomberg terminal. You're going to see it as a cry-on in every news network, and that's a fact.
I mean, I'm an Australian, so it's already $100,000 to me.
What are we at, like 48K in inflation-adjusted dollars? I mean, that's the other thing people were talking about, right? We got to 73.8.
One of my favorite stats is where they talk about how many Bitcoin it would take to buy an average American home for each of the last halvings. And, it went from 300 or something Bitcoin to 4 or something. So you can clearly see what's the inflationary currency.
I mean, I did a study on this the other day. In Australia, we've got the same problem as Canada, where our housing is just unbelievably unaffordable. Since 2020, houses are up 75% in Australian dollars, but down 40% in Bitcoin terms. So, one to the other.
Yeah, so even in the incredibly overbought real estate markets, Bitcoin continues to preserve that power.
One thing that is a bit interesting, I think, about this current cycle and where we are with the institutional interest is, we're at 65,000. We're right around, floating around the previous all-time high. I think the profile, the structure of the investor, the new flows coming in is entirely different, and it very much relates to the macroeconomic landscape. The cash stimmies that came out in 2020 and 2021, the pure frenzy in unprofitable tech, and the GameStop mania and the zero interest rate policy in 2021 is different than now. And I think a lot of the smaller fish, right? Whether it's middle class, lower class in the U.S., the type of people that were just kind of punting for the first time investing, Bitcoin kind of being one of those correlated names, or I would say broadly crypto, right? Now, right, that retail interest or that that kind of frenzy, that fervor that existed in 2021 has all dissipated, right? And now the investor class, you have Larry Fink going out and saying Bitcoin is a hedge against the fiscal situation in the United States.
He said the fiscal situation of some countries, and then kind of winked. I think we know what he was talking about. Just this week, the Jersey City pension fund announced they're going to allocate to Bitcoin. You have the Wisconsin State Investment Board buy Bitcoin. I think you're going to see a lot more institutional, I mean, these, to be clear, a family office can be considered an institutional investor, just a wealthy person. State and pension funds are true allocators. We're talking Wisconsin State Investment Board is $106 billion under management, right? It's in a different league, and And by the way, it's also easy for them to dip their toes in what we would consider size, right? 1% of that fund is only $1.6 billion. Only $1.6 billion. So you are going to see, because the data is clear, it is an uncorrelated asset over longer time frames. It absolutely is fundamentally a hedge against the, I will say fiscal imprudence. And so you will see that more. I totally echo that, Dylan.
So my interpretation of the data so far has been that macro accounts for no more than maybe 30% of sort of the up or down from diminishing returns, where we had 100x the first halving and then 30. Should have probably had 10, except because we ended up having this rapid acceleration in interest rates and a couple of wars. We ended up only going up about 8x. Works both ways. So if a natural sort of diminishing returns gets us as 3x to halving, and Trump gets elected, we'll obviously hear from him tomorrow, and then he does go ahead with the rumored, sort of plan to add Bitcoin to the strategic reserve. What does that do to the price of Bitcoin in terms of demand shock and supply shock?
Well, Chuck, I know you have some thoughts on the diminishing marginal returns.
Yeah, again, when it comes to the 4-year cycle, I think the thing that I find really interesting, it's happened now 3 times, right? 3-4 times. Is it going to happen again? Honestly, I operate under the assumption that it may not, right? Because it may not, and I think anchoring to, it has to. I see a lot of people saying, 2025, in October, it's going to top. It's like, based on what, right? Based on what? So what I like to look for is what are the actual mechanics. So you mentioned a supply sink. We talk about these ETFs. In my estimation, we've actually seen this ETF movie at least 3 times in the past. And I keep using this analogy. Again, they're not perfect, and some of these are kind of around the edges, but it shows that there's unique dynamics each cycle. What is an ETF? It's a pool where coins go in, and then they trade around on the inside for some purpose. When did we see that before? Well, 2017, a whole bunch of coins went into Binance and traded around on the inside because Bitcoin was the quote currency. A giant sink. People were buying Bitcoin, using it to trade everything else. We saw it in 2019. We went from 4K to 14K. It just happened to be the plus token Ponzi in China was absorbing like 2% of the Bitcoin supply, right? Which the CCP then proceeded to sell onto the market.
That blow off top, by the way, happened at Bitcoin 2019 in San Francisco.
Well, we just saw the German government do the same thing, right? Government selling coins is a common occurrence. We then saw the GBTC inflows in 2021, right? Sucked up 660,000 Bitcoin in 4 months. We've seen the ETF, and now we've got the new ETFs. And I guess the big difference with these ones is it opens it up to a much broader audience. You get the passive bit. So in many ways, we may not have diminishing returns to the upside. We could actually have higher returns. What they may not be is as volatile, right? We may not get this ridiculous blow off top. It's just this slow, steady, boring grind higher that most people get so bored they sell only to miss the stair steps higher. And we may not get the same kind of floor to the downside. That said, there's things that could, imagine if Coinbase, something went wrong there, we're going much lower than 50%, right? There's a whole lot of things that he's like anchoring to. It must be 4 years, it must be in December, it must be diminishing. I think that's probably not useful because based on what?
We've also seen some evidence of what you're saying already with the last couple months of volatility. Very, very few outflows from the ETFs, right? So likely to dampen, I think probably up and down, these types of passive vehicles. Michael, to your question about the rumor about a Bitcoin strategic reserve, I'm going to come out and say I really hope he doesn't announce this. I think it would be bad for America and the dollar, most likely to do it any real way that's being talked about. I do think it makes sense for any nation to strategically hold commodities that matter, and Bitcoin is one of them.
I don't think we'd be backed by Bitcoin, but if you basically just took the 200,000 Bitcoin that they have right now, instead of selling them, say we're going to put it in.
Yeah, I agree.
We certainly don't have enough gold to back the dollar. That's for sure.
Yeah, I'm not sure how much gold we have. I don't know if anyone knows the answer to that. No, I think it makes sense for a nation to have access to Bitcoin.
All gold on Earth is a little over 15 trillion. What's our debt?
That's 35 trillion as of like this morning, I think. Yeah. I don't think they can seize that from the Justice Department without some legislation, the Silk Road coins and the others, but they should figure out how to. They shouldn't back the dollar. If they announce or buy Bitcoin in the Exchange Stability Fund, stabilization fund or at the Fed, it will cause the dollar to crash. They want a weaker dollar for manufacturing purposes, but not a spiraling dollar. But you could buy Bitcoin for geopolitical strategic reasons. I think the reasoning matters, but even more than that, look at this conference, okay? We don't need the opium of a Bitcoin strategic reserve to be bullish on Bitcoin from this conference. So I really do hope that if something is not announced, we don't, feel upset about that.
I'm going to go back to cycles again. There's all sorts of cycles, right? So there's, Ralph Elliott with the Elliott curve 100 years ago or so, he started talking about microcycles that could be days, cycles that are typically weeks or months, maybe a year or two, and then you end up having, sort of broader cycles like the 4-year cycle, and then you have the super cycle. He was really one of the first people to use the word super cycle, and those are usually 10 or 15 years, and they usually dramatically increase. The reason why I'm talking about the super cycle in my book is because with the diminishing returns, if it continues, you literally would never get to $1 million Bitcoin. So there has to be a break in the diminishment, and that's what I think is going to happen in the next, 2 or 3 cycles, where you break that instead of going down 3 to 3x, maybe it's 5x, or if it's not this cycle, instead of going down to like 1.3x, maybe it's a 3x a second time in a row, or the diminishing losses becomes less, and it doesn't drop 85%, 83%, 75%. Right now, that would mean that if we went up 3x, we drop, 2/3. And so those are things that I think, because of the technology aspect of adoption, most technologies, when they reach about 8 to 10% of the population, they shoot up quickly to 80% in a decade. Happened with color TVs, happened with mobile phones. Are we getting, in terms of an adoption metric, the place where it's getting really exciting? Billion users, 5 billion users. What did your research say?
Well, I think if I look back at my own journey, I really started understanding Bitcoin and starting to stack sats properly in like 2019, and that's because I was starting to understand what was coming in terms of the fiscal situation, the debt situation. That was like my learning curve, and essentially we're watching that happening today, the early stages of it. So, you kind of have to look ahead, and most people in markets, just generally speaking, don't look that far ahead. It's kind of more immediate stuff, which is why you get these bubbles. So simultaneously, as I'm watching the thing that I was buying Bitcoin for in 2019, as I'm watching it playing out, right, I bought the insurance, I'm watching the petrol getting poured on the house, and there's a bunch of guys running around with a match. Do I want to sell it now? Probably not. So I think my probability of actually selling those coins is substantially diminished, but simultaneously more and more people are starting to notice the fumes, right? So I think we're getting this, who is actually going to sell into this rally? I'd say a lot of people are here probably for the same story. Probably not that much, right? Kind of let this thing do its job and protect you from the debasement. And meanwhile, more and more people with more access with the ETFs and the like are going to be able to actually place that bet and see the same thing. So, at the end of the day, what creates the top of a cycle, or the diminishing returns, or however we want to frame it, it's people selling, right? And there not being enough demand. And we're kind of heading into an era where the demand profile is becoming increasingly obvious. The sellers are going to be increasingly, sorry, I need a higher price. And I think that you mentioned the ETFs. The average cost basis for the ETFs is about 58.2K, and we saw a price trade-off below it. And there's a bunch of TradFi analysts out there saying, oh, look, all these paper lettuce hands are going to sell their coins. And they didn't. The inflows restarted, and we saw $2.5 billion in 2 weeks. So that, to me, looks like the demand profile saying, hey, if I can get a second bite of the cherry, why wouldn't I? So in many ways, we're at, 68,000. This is kind of a level where people are saying, hey, it's still cheap. And they're saying it's still cheap in size because you've got the supply, they're not going to sell, and the demand, people are starting to work it out.
On both of your points on the fiscal that you said, your thesis in 2019 coming true, and to Alex's point on Donald Trump and whatever he might say or may not say, I think there's a few points. One is that we just had, from 2020 to 2024 to today, we had a 30% inflation shock. And in that time, if you can go back 10 years post-Great Financial Crisis, a bunch of IMF central bank economists were saying, look, the only way to get out of this debt bubble is an inflation shock. We catch the market by surprise, we pin yields, and we see a burst of inflation to get debt levels down. And we had a 30% inflation shock. We had the highest inflation shock in 50 years, and most people here's lifetime. And the debt to GDP went flat. It went nowhere. And so I think when you have something like Donald Trump coming in, I understand he's polarizing, and I understand half the people love him and half the people hate him. But every world leader worth their salt, especially our adversaries, are looking at the potential leader of the free world with the world reserve currency saying whatever he might say, and I understand the political benefit of coming to a conference and pandering for votes. That's politics. But again, that sends it's sort of a bat signal to Russia, to China, to Iran, right? And if you look naturally, if you think about geopolitical game theory, China banned it. China, well, they've banned it multiple times. It's kind of a running joke. But China banned mining in 2021, right? 50% of the hash rate for Bitcoin got up and left and came to the U.S. And so when Trump says this new money that arose from scratch 15 years ago, we want it all in the U.S. and we want it all to be mined in the U.S. and helps us be energy independent. Everybody, every geopolitical analyst, every intelligence agency, every leader, especially leaders that don't have their own currency or hold G7 reserves and see what they did to Russia after they invaded Ukraine and they seized their central bank reserves, they're looking around and saying, well, hey, Bitcoin was kind of a joke, but it's now $1 trillion. We can't afford to ignore this.
So China also restricts the use of Facebook and Google, and it didn't seem to kill them off globally. A question on sort of where we're headed in terms of getting 1 billion users. I think the best estimates I've seen now are about 400 million Bitcoin users and about 580, maybe 600 million overall crypto. So that means 200 of them are, Dogecoin or whatever. And when we get to 1 billion Bitcoin users, not just crypto users, 1 billion Bitcoin users, do you see that demand coming primarily from, Africa, the global South, sort of using it in small amounts for day to day, or from, millionaires realizing that there's not enough Bitcoin to go around for every millionaire to even have one Bitcoin, or is it a combination?
I don't think we've seen a lot of success in terms of numbers of people widely using Bitcoin to become banked if you are unbanked, regardless, or even remittances. We're seeing some for sure.
Certainly in Africa you've seen it.
Yeah, I think, more in countries with political repression in Africa, absolutely. I think it is good for that. I think you need scaling technologies to make that feasible. Even just where I would expect transaction fees to go will price a lot of those people out. I think an enormous number of people will own Bitcoin through their 401ks, retirement plans, endowments, and pensions. I want both to happen, though. I think Bitcoin is absolutely not valuable if it can only be used in a centralized, wrapper of an investment account. So I hope to see that, Michael. I think we need better scaling tech to really onboard that many individuals, though.
Yeah, I say this as a Bitcoin bull. Obviously, I don't think there's even 100 million Bitcoin users. I guess everyone that has a share of the S&P 500 owns a share of Tesla, owns a little bit of Bitcoin, but. And I think that's honestly how a lot of this Bitcoin exposure happens, right? Is the BlackRock ETF gets passively invested into endowments and pensions and 401ks, and you have 100 out of the 500 S&P 500 companies have a little bit of Bitcoin, and that's kind of how you slowly everybody gets a little bit of exposure. But I wouldn't say there's maybe even 10 million self-sovereign Bitcoin users.
A lot of them are through centralized exchanges. You only have about, I think it's a little shy of 100 million wallets.
Yeah, so I think if you actually look at wallets with more than I think it's $200 or $500 of Bitcoin, there's don't quote me, it's 34 million. And how many people in this room have more than one UTXO, more than $200? So, if you're talking about 30-something million as your upper bound, we're talking about a small number. But I also think that Bitcoin at the base stage, I think we all know it doesn't scale to 1 billion people. And I also think, and this is, again, I say this as a Bitcoin bull, as an advocate of self-custody, outside this room, there just are not that many people who are going to self-custody, right? There are people who get into Bitcoin, but there's a much larger pool of people who do still want that trusted intermediary, whether it's the ETFs, whether it's banks, whatever it is. And I think Lynn Alden's got the best quote for this with the ETFs. It's an API into Bitcoin. Some people will choose that optionality via the ETFs. Some people will choose self-custody. right? The most important thing is you have the option to take that self-custody. But the vast majority of people, that's not what they want. They require that trust. And I think having the optionality for all these people, whether it's passive investment, whether it's owning it outright, whether it's in the third world where it's actually a protection from debasement and, political elements, I think all these options, but Bitcoin at the end of the day is an optional thing. And to be honest, you don't need 1 billion people for Bitcoin to be successful. I think the Resistance Money guys did a great job of just saying, would you rather, if you were plucked out of your body and put into anyone else than 8 billion people, would you rather Bitcoin existed? I think the answer is just unequivocally yes. And that to me is success. That's what success in Bitcoin looks like to me.
So I remember in 2013 there was a couple of days where Coinbase basically ran out of coins to sell. And, it would crash and this and that. We certainly are going to see that type of scenario coming up, if not this bull market, the next bull market, because I think the statistic is something like 95% of the Bitcoin are held by 2% of the users currently. And since we've already gotten almost 20 million of the 21 million out, it's going to take 100 years or so to get the last million. You're going to have, I know so many people who are like, yeah, I've got, 1,000 Bitcoin and I don't plan on spending any of it. It's for my kids, my grandkids, or whatever. Unless the kind of hodler philosophy just goes away at a certain point, 100,000, 500,000, 1 million, you're still going to have that dynamic where there's, besides the lost coins, the Satoshi coins, there's the hodl coins, which is a substantial number of the coins. And yet, if you end up having, more and more people buying, at some point, what happens when effectively at the top of a market, these centralized exchanges run out of coins to sell?
Well, I love the point there. I think we got to wrap it up, though. We're getting signaled over there. So I appreciate everyone tuning in.
We can start 20 minutes late.
Let's go.
They can kick us off whenever they want.
Thank you for tuning in.
Thanks, folks.
Appreciate it.
Appreciate it.
All right.
Thank you very much. This was the end of the 4-year cycle. Alex Thorn. Checkmating. Dylan LeClair. And Mr. Terpin. Thank you. Ladies and gentlemen.